Hey, everybody. Thanks for coming today. I hope you're doing well. My name is Jeff Gibby. I'm going to be introducing our guest today. And you've came for a very, very good session. I appreciate your coming here today. Let's go ahead and get to the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins, and it is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So there you go. I do want to welcome you to today's class. We have a very, very special guest. Anne Marie is going to be joining with us in just a few seconds here. Anne Marie is somebody that we've worked with for a number of years. She's one of our most popular YouTube contributors, has one of our second most popular video. She always has a pretty good insight into the market, and I'm really excited to see what she has to say. So without further ado, let's get her on here and get the presentation started. If I can run the buttons fast enough. Hey, Anne Marie, how you doing?
Hi, I'm well, Jeff. How are you?
I'm doing great, thank you. Let's go ahead and turn. What do you think of these markets these days?
You know, they've gotten so whippy that I've actually moved to a 2-day signal. So instead of just looking at the daily charts, I'll go back to the weekly and then I'll do a 2-day to take a look at what the, hang on 2 seconds, let me show my screen.
Yeah.
Yes?
And you're going to be
Yeah,
talking a little bit about that today as well, right? About kind of the new
absolutely.
strategies you're using for
Yeah,
extra.
absolutely. Absolutely. And it's a great time for us to talk about the stochastic momentum index because it is such a powerful indicator for telling us a little bit about both range and motion as well as support and resistance. So last couple of times I've talked about the stochastic momentum index, or the SMI, which I try not to use too many letters when I talk like that. So the SMI, that stochastic momentum index, what we're going to see is that it really does a great job of identifying support and resistance at the same time, because it's a complex enough indicator that it has a ton of interesting information sitting in there. So the first thing, if we could sort of jump right into SPY, I will do that
Okay.
if you
And
would
I'm
like me to.
I'm going to
Yeah.
do my what I'm really good at. I'm going to get out of your way.
Oh. Well, let's take a look at what the SPY is doing. And of course, I am on the MetaStock platform here. Let me share with you a little bit about what the properties I'm running right now on this stochastic momentum index. I'm running a 12-4 with a 3 for the double smoothing event. And very importantly, I'm using a 6 variable moving average. And so when you open this up in MetaStock, you're going to see this line, which is the moving average, tells you where it is relative to motion. That means that if I am above the 0 line, that moving average is going to give me upside pressure. And when I'm below the line, it's going to give me downside pressure. And then on top of that, we look at the slope of the line. So location tells me a little bit about the temperament of the chart, and slope tells me what the chart is trying to do. So for instance, if I look at this wave right here with this moving average, it runs down. And so I can look at this and go, okay, I'm under the 0 line and I have negative slope. And so I know my markets are probably moving at a fairly good clip. And you can see that. When it flattens out and turns in the other direction, the first thing that it's trying to do is test resistance. It's trying to recover to say, hey, let me see where I broke down and where I have significant resistance. So for me, I like to look at the places where the chart really came into a resistance zone and then just didn't move forward. That way I know everybody that came into this zone, everybody that was participating in general anyway, sold off when they came into these price points. And so when I look at this, the first thing I'm going to think about when I see this moving, let's say we can't see the chart, right? I'm going to squash it way down there. And we'll look at this. This tells me, hey, I've hit the bottom of support, and now I'm running up into a resistance zone that's going to tell me a little bit about what kind of price action I have. And if I come into this area and flatten out, it should match the last area of resistance that I saw over here. And so taking a look at that, it's a little bit of a nuanced way to use the SMI, but indeed it's very powerful. And before this time, I actually had not mentioned it. So what it actually does for us is create target zones. So very interestingly, if I look here and I see sellers, I notice the rollover. I'm going to look for support. Here's my first edge of support. And then as I move up, my moving average stays negative. So if that moving average stays negative, now I'm looking at, okay, all I'm doing is running into resistance. We like to call this negative divergence, where we see price action being the same and momentum shifting downward. On top of that momentum shifting downward, the moving average also tells us that there is weakness sitting in the chart because it's sitting under that zero line. So there's a lot to look at when you are staring at the SMI in order to decide what to do. So let's just talk about the markets as they're sitting right now, and let's just put what we know about this into practice. So, well, what I have on my charts here is target rich trades, but we're just going to look at what the SMI is doing to help us decide what we're seeing. First thing we're seeing is negative divergence. Now, a lot of people who've been trading a long time in the market say the following thing. When the Fed is tightening, it's never a good idea to stay long in the markets or to go long for a longer length of time. Now, we started tightening in, where was that? We started tightening last year in December, right? And then we tightened again in June, right? This is sort of the June 20th area. We had the FOMC come out and tighten, but look at price. Price continues to move up. So there's something that's different this time. Now, traders will always say, hey, listen, you don't want to think about it's different this time being the primary thing that you think about, but it really is different this time. And let me explain just very shortly, very quickly why. We are essentially the only global market that is performing. Everybody else's markets are underperforming and nowhere near new highs. On top of that, the Fed and central banks for many of these global markets, they've got 0 to negative rates or very close to 0 to negative rates. So if you are someone who's looking for yield, now remember, a negative rate says, I'm going to charge you to park money here. Nobody wants to do that. If you had a savings account and the bank said, oh, I think I'll take some money from you every single month because you have it here, that's equivalent to a negative interest rate. Now, there are a lot of things that they can do, carry trades, blah, 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 but We're not going to think about that. What we're going to think about is, okay, all of a sudden, I can't buy bonds and treasuries because they're giving me 0 to negative rates, but I'm in charge of all these pension funds. I'm in charge of things that must have yield. So where do I go? The only performing market in the global structure, and that is the US stock market. And so every deep dip, buyers come in. Now, this is a game of musical chairs because we're also in the middle of global slowing. And if we have global slowing, that means we're going to have worse earnings and we're going to have less output in general because there are going to be less sales. And so our companies are going to underperform just a little bit. So the big picture for you as a trader is to say the following: is my moving average sitting above the 0 line? The answer is yes. Do I have a histogram that's above the line? Yes. So both of those things say I have positive pressure. What's the slope of this moving average? Well, it's a little down to flat. And so that tells you to not buy highs and to not buy breakouts. 100%, it tells you if you are getting into a space and you're looking like this and you want to go long, you're best served doing it at support. And so here we are at another high in general in the SPY. We're holding this edge. And so this chart says, hey, on my weekly formations, I'm bumping into a little bit of trouble. And so what this tells me is once I get up and over my weekly highs, if I'm long, I better take some profit. So this is what we are supposed to be doing right here. If you're long the SPY, you should be thinking about places to take profit. If you're saying to yourself, wow, I haven't really participated in this because I've been concerned about pullbacks or because these pullbacks have been significant, what this is telling you, the slope of that moving average and this negative divergence is telling you pullbacks are the buy zones. And take a look at why that is so simply true. On a weekly chart, we still have upward trend. So we sit on the side of trend when that happens. So that's the weekly formation. Let's go down to the custom formation that I've been using, which is 2 days. Now I've been using a 2-day multiplier because charts have been extremely noisy. And what I am looking for is a smooth rhythm. And so this rhythm action is actually telling me the same story, but it's allowing me a lot of time where I can participate on the edges. Here is the thing about the markets, and the SMI will tell you this. Once you slip below this 0 line, it tells you that there is bearish pressure. However, the trend is always in charge. And so if there is a bearish pressure event, it is telling you, look to the left for support zones. So here's the wonderful thing that we can do with the SMI. We can look at this rounding formation right here with the moving average, and we can stare down at the chart and it will give us a range of motion that is going to be support. Same thing here. This edge gives us a range of resistance. So what this tells us is that the first time we get into the resistance zone, we are going to see people who are giving us selling pressure events. Now, the chart that you're looking at here has these red and green bars. And so let me explain a little bit about that. It tells me that a trend is in progress. If it is filled in, it's a negative candle. And if it is clear or open, it is a positive candle. And so you'll notice this area of resistance defined here tells us that when we pull back and build a support zone, and we move up again, we're going to be going into the first resistance defined here in this space. We know that we're going to have sellers, but the interesting thing is, if you're sitting above your moving average, you're going to be in good shape. Here's my note to folks who like using moving averages. Don't make them too tight, because trading long if you're above an average and short below an average, I've never found that to be entirely reliable, and I've been really working in the markets for more than 15 years. And so that tells me that my experience is valid enough, particularly because I still trade every day for a living. This is one of my favorite moving averages to use. It is a time series, and I'm using the 20 time series. So how do you read that? Slope. That's it. Is it going up to flat? That's great. If I am doing this, then my pullbacks are going to be buy zones. I'm not going to be shorting it under that. The time series tells me what's happening over a short period of time, and it builds me a beautiful analog of what I need to be looking at the market for, whether long or short action. And so I will simply look at the slope. I'm not going to look at whether it's above or below my candlesticks, above or below the moving average. I'm just going to stare at them from that perspective. The next one that I like to use is the 6 variable, which is the same thing as this in terms of it being variable. This one's just a little bit slower, okay? So I have an SMI with a slower variable, that's a 9, but this one down here is a 6. And so what it tells me when I am above and below this, then it tells me I've got significant selling action that's likely going to give me more downside opportunities on the bounce back. What I can do there is when it has slope downward, I can increase my size. That's always something very, very important. If it's flat, I know that I am trading from support to resistance and then back down into support. So what we see here from this SMI is that we're building support here. And this area of resistance is very similar to this area of resistance. And so today, it told me intraday that if I had a deep pullback close to my moving averages, I could go long, but that I would have to take profit up at my selling formation. And that is because this resistance area matches this resistance area. It doesn't mean it's going to break down. But what it does mean is that sellers are likely to show up in the short term, and that's going to give me another opportunity to go long. So where is that? That's going to be at around 295 to 294, 293. If you look at that and you say, gosh, that sounds really, it's a lot of work. These are not simple markets. This is a beautiful trend. This is very noisy price action. And if you try to take a breakout and you don't know when to get out, you're going to be in rough shape. So when do you get out using the SMI? Here's a crossover event right here. And when the crossover occurs, it tells you that price action is getting ready to shift. And so as you look at this formation, you can simply look at the cross and go, all right, I see my crossover. Let me go down here. Let me see how much risk I will entail if I go long here. And if I can see any kind of pullback, does it hold for me? Here is a wonderful, exciting thing. If this crossover occurs when you're above your moving average, you've got yourself a nice run into the prior resistance zone. Where is that? That's going to be your last crossover. So crossovers do a great job of telling you what is going on in the chart. So right here, we have a crossover. That crossover is very sharp, comes into play. Where does it go? This area here gives us our last relative support zone. And that's exactly what it came into. Held that actually really well. Now, here's the thing. It held it better than well because it did not come into the lows. It gave us higher lows, and that means buyers are still in charge. So if you say to yourself, well, gosh, if you tell me to take profit and buyers are still in charge, could it be that I could hang on and this chart will pull back and bounce higher? Absolutely. Absolutely. You could have something that looks like this, comes into this area and turns right around and moves higher. And essentially, that's sort of what we are looking at. However, in this market, we have a ton of noise, a lot of news, and a lot of things that could give us displacement or shock. And so if you are long the SPY or you are long something that's going to stop you out on a very deep dip, it seems better to me to engage very smartly to say, hey, I'm going to take, if I take 100 calls, or, well, let's put that in something more reasonable. Let's say I take 5 calls in the SPY as it pulls back into support, and I move up here, I want to take 3 of them off because this recent past is going to predict my near-term future. It might not give me a deep rollover like this, but what it is going to do is come back and test relative ranges of frontline support, and those actually might lose. They might hold. But because we're sitting up here with this slope, that's upside, and this motion, that's upside, it's telling us that, hey, if I pull back here, the first thing I'm going to see are buyers. But until we break out of this range, we have to anticipate that we're going to see sellers at around 302. So that's really basically how I use the SMI and how I found it to be most useful. What might be interesting is if we pick out a couple of charts of interest to you specifically, and let's just have a look at them. Jeff, would you like to help us manage that, or what would you like to do? Let's see something else while we're waiting for Jeff.
Oh,
Let's take a look. Ah, there you are.
sorry, I had to wake up my sound guy.
Sorry.
He's laughing over here. We're like, where's the unmute button? Where's the unmute button? Anyway, we're here. We were.
Yeah, do you have any questions about the support and resistance angle we can use with the SMI, or are there any things that you would like to see, or
I don't know. I don't know if we have some time. Maybe we have. I was going to say maybe we should ask if people want to look at some specific stocks.
Yes, absolutely.
And but before I could get it out, Brian Hendricks knew where we were going. So let's go ahead and wow, hold on a second. Let me go ahead and resize this. Let's here's some stocks people want to see. Do you want them one at a time, or just me to give you about 3?
Let's do. Hang on. Let's pull this out and just maybe give me about 4.
Okay.
So,
So IMW.
Oh, IMW or IWM?
Well, it does say IWM. That's just my dyslexia kicking in for you.
Okay. All right.
That one's from Brian. We've got TRI from Scott Gow. Hello, Scott. Good to see you today. And then Tony wants to look at Roku, which I saw a very interesting story about Roku yesterday. So apparently they had disappointing earnings.
Okay, so here's the thing. I got to tell you something. I have a position in Roku, and I'm
Yeah.
gonna.
So yeah,
This is a great story here. It's superb. So, I'll tell you why I
I
took the position, and then what happened. So,
I'm
go
an
ahead.
adamant user of Roku. I absolutely love the Roku TVs.
It is. It's phenomenal. It's really good. All right. Any others?
Yeah, if you want to do some more, there was a couple more that came in. I don't see anybody asking in YouTube, but it's a little bit delayed. The other one that I have is XLE.
Wow. Is TRI the correct tab for? Is that the correct ticker inside of MetaStock? TRI.
Go ahead and just click on instrument search right there, and we'll find out real quick.
Okay. Yeah,
Because I'm
sure.
not sure where it trades. So just type in TRI
Uh-huh.
and then starts with. You're right there, yeah.
Uh-huh.
And it is. It's Thomson Reuters. That's what I thought it was, but I haven't traded Thomson Reuters since it was Reuters. So, all right. So yeah, TRI is correct.
Okay, great. All right, let's take a look at these. I have all of these charted up really well, except for this one. So
We got another request for BAH.
I've lost you again. Sorry.
That's okay. It seems to be cutting out a little bit. BAH from Bruce Gill.
Oh, that's so weird.
BAH.
All
Okay.
right. Okay, so the first one we have is Thomson Reuters. And so let's take a look at what's happening. We can see from the moving average perspective that there is a problem here, right? You see it drifting down. Momentum is also drifting down, but price is holding solid. So here's the thing, price always wins. However, if you want to short this position, it means that the resistance areas are going to give you the selling opportunities. So I like, again, the 2-day cycle works tremendously well because it cleans up all the noise. And we have this resistance zone here. Again, here's the first hump. It says that's resistance. So it tells us that the next time it comes up there, it's also going to be resistance, particularly because we've got a flat moving average. So what this is telling you is that people are concerned about the performance here in terms of moving up. So they're trading a range. Now let's take a look at the weekly and see what we can see. The weekly perspective says basically the same thing. So here's what that same thing is. Pressure is drifting down. Momentum is drifting down. So two things are going to happen. Either the pressure is going to break, at which point we move to a deeper support zone. Here's the last edge of resistance. And then here is a very heavy congestion zone around 65. Right? If it loses that edge, there's really nothing holding it there. It's just sort of straight up from February. Look at how bullish this is from this perspective. But the crossover event starts from here, and there's a kiss and then more downside pressure. So again, this chart is in rough shape. Now, when do you want to trade a chart? One, you want to trade when there's a catalyst, and you want to trade in the direction of the motion of that catalyst unless the motion is done. And then you want to move in the opposite direction. So what is my thought? My thought is a long action event somewhere around this moving average, 6 variable, is about 65 or 66 and some change, and your stop right at around 65. If you don't want to get stopped out, you're going to have to move that a hair lower because these wicks are telling us that 63 is really where the baseline is. And in my mind, what's going to happen is if you try this long and it gets up here and this crosses and gets smaller, the stochastic, it's going to be a short. Because I like running with momentum, what I would be doing is trying to short the bounce off this edge, particularly as this moves down and price action stays steady, and I can see it on 2 time frames, my custom time frame and the weekly time frame. Now, if you are an intraday trader, these time frames still work the very same way. They work very, very well. And what they tell you is just look for the edges of support, right? And if that support breaks, you've got yourself some trouble, but it should bounce the first time. If it bounces and does not recover, there is a problem ahead. So that would be that one. Let's talk about Roku because that's super interesting to me. So I'm going to actually pull up my Roku chart here. And so here is our, well, that's very strange. It did not save it. Okay, so let's apply my template. All right, so Anne Marie is a big fan of Roku. I'm very disgusted that so much of this move, I just sat looking at it going, it's going to come back. It's going to come back. It's going to come back. And so it was a darling, and it's been a darling. But if you've been looking at the news, you've been hearing the talking heads talk about the shift from momentum to value. And one of the highest momentum stocks this year is Roku. The next one is Shopify. But Roku is up 600% since the year started. I mean, it was like 30 something bucks or something. And it went all the way up to 180 and some change. All right. So my thought is, hey, where's my old support zone? It's right there, right? Sitting right in that zone. So I draw a line here and I say, that's pretty big trend. I'm going to say that that number is about 130. And my chart should do pretty well right there. And so I look at this, and of course, this is the technique I use. I go from support to new resistance because this is now a plateau that this chart had trouble with, right? They did have bad news, but here's my thing. I don't really listen to news associated with a stock. I look at the chart to see how traders are behaving relative to that news. So anyway, I say to myself, I have a flat moving average and this all of a sudden has broken down. My markets are sideways. I'm opening up an iron condor and I'm going to use the 160 to 165 short call strike, and I'm going to use the 130 to 125 put strike, and I'm going to sell it. I'm going to see how it goes. So there I go. I did it yesterday when we were coming into 129. I said, this is going to hold. So as soon as I enter, of course, I'm entering strategically. Here's my support zone structure. I know this is my area of last support. If not, it's going to go down here. It's going to be terrible. So I'm sitting around and I'm looking at it and I'm thinking to myself, oh, wait a second. I could do a call spread there and it would look great. So it's still at 130, dancing around there, and I say, okay, I'm doing it. I'm picking up my call spread because I expect the bounce here into this zone. And whenever it gets to the price, it could be next week, it could be tomorrow, whenever it is, I'm getting out. Now, I hope it's a little while further away, but because I want some option erosion, excuse me, I want some option motion that allows it to hold and build more value inside of my long call spread. And so I pick up some of those calls, and the call spread, I think I was paying like 230. Well, as soon as I entered the trade, it started fading. And this is the reason I like to sit in the option space when I'm playing with stocks, because, and I don't mean playing, I mean working with stocks. When I'm in this space and I'm taking a look at what's happening, the first thing that I think about is, what if I have an uncharacteristic drop off? Am I going to get stopped out if I just buy stock, or are things going to look better for me if I have an option? And of course, the answer to me is always, stick with the option, because the price action is going to bounce. Why? Because old support after a new high, when it's tested, it bounces. That's the first thing that it does. It will bounce. Now, I don't know if it's going to hold the bounce. I'm guessing that it's going to have trouble holding the bounce, but all of a sudden I see it drifting. It goes to 127. It closes at 129. I get up this morning. It's, 124 and some change. And I'm thinking to myself, this is the pits, because I've lost half the value in the option. It's 50% down. And because it's a long call spread, it's a debit spread. So, I mean, that's real money that's down the tubes. And so I think to myself, all right, am I making a mistake strategically, or is this an overdone fade that's going to bounce? And I look at my chart and I go, okay, these are 2-day candles, 1, 2, 3, 4. So that's 8 days of motion all around this 130 area. And I have 1 day of motion working here. Is this chart going to bounce? The answer is yes. And it ends up bouncing very nicely. So the next question is, well, what do we do? Well, notice the volume action here is much lower. Now, we only have one of these candles. This candle will still be worked on tomorrow. But if the volume is shallow and it's not high like this bounce is going to be a sell zone. And once it sells off of this bounce area, right, it's going to bounce. If it cannot get into this area, remember, it's sitting underneath this moving average, right? This is the moving average that's very important. This tells a trend. So now I have slope, 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 and I'm at resistance. So that one's going to break back down. It's going to lose the 130 area, and then we'll watch it go into the gap.
I have a question for you, Anne Marie. Can you hear me? I think she's not hearing me very well.
I can hear one half of a sentence, one half of a word, and then you totally go out. I don't know why.
Oh, let's see. I blame the new audio guy, really. He's looking at me like, you. Let's see. Are you looking at the hourly? Uber Forever is asking.
Hunter, maybe you can translate.
Hey, maybe. Give it a
Oh,
go.
there you are.
Oh.
Can you hear it now?
Can you hear me now?
Hear you. Yes, I can hear you now.
The sound guy's awake now, so we're good.
Yeah. Got it.
I got him some coffee. Uber Forever from YouTube wants to know if you look at the.
There you go. Yeah, go ahead.
He wants to know if you look at the hourly.
Is everybody else hearing you and me?
I don't know.
Do you look at hourly?
Do I look at hourly? It is too noisy right now. Let me show you. The markers, of course, remember, moving average above the zero line, we've got positive drift. Below the zero line, we have negative drift. And then on the zero line, we have sideways formations. Certainly, you can use hourly with your SMI, but the picture shifts so quickly. If you say, well, what direction is this chart going in? What is my story about why I get involved? See, for me, the big thing that I've come to know as a trader, and I'm thinking, and I get sweaty when I think, so I apologize being all shiny. That's just a girl. Only a girl would say that. A guy would never say that. Totally sorry.
Jeff
But
says
the
that all
thing
the
for
time.
me is I have to have a story about why I'm trading. It's not, okay, my technical indicators tell me that I need to have a trade here. I have to think about what my traders are doing. And so the first thing I think is, wait a second, we've got ourselves a problem because people are shifting through into value from momentum, and this is a huge momentum stock. So if I see it short, I'm going to have to wait unless I say, hey, I'm going to catch it short right now, as soon as it breaks off of my major resistance lines that I can see on daily or multi-daily charts. What I end up seeing, if I'm trying to look for the buy zone, is all kinds of noise that says, hey, this is moving. Again, it's only moving to resistance. That's what it tells me when it gets up to that space. And so you have to look at it and go, all right, if I'm moving into resistance, what's my last support area? Well, it's right here. Old support, new resistance. That's exactly what it does. Can you use the hourly? 100%. Yes. Is it difficult to think through the mental process and make a decision well and execute after making that decision well? Therein lies the rub. And so for me, it's big picture framework, big understandings. My catalyst is, where is big money moving? Is big money moving into a resistance zone, or are they moving into a support zone? And if no big money is moving there, why do I want to move?
She waiting for me?
Make sense?
Yeah. Yeah, makes sense.
You'll find much better trades if you can see catalysts, and that those catalysts are big money putting their feet in. So how do you know it's big money? Big money moves on big time frames. It's too expensive to move in and out unless they're high frequency traders, and that really can shift in any direction. But remember, big money runs the market. It's the retirements, it's the 401ks, it's the mutual funds, it's the pensions. All of those market participants move with big intentions, and those big intentions only come in value places. And the only place we see value are on bigger time frames.
We'll try it. Uber wants to know, Uber Forever wants to know if you see a particular sector.
Let's look at the other one.
Okay.
I didn't hear you. What did you say?
Go ahead.
I hear you laugh, and then as soon as you start talking, it knocks out.
Yeah, I think it might be just you. It seems like it might be related to you because the other metrics look good. So, I'm just going to let you keep going.
What
Just
was
go
the
ahead and
last
keep
one
going.
we had? We had Roku, we had, IWM. Let's see where that one is. I'm so sorry. I don't know. I don't think I did anything,
You're
but
fine.
that's the strangest thing. All right, so the big thing is that this one has been on a death knell for a while, right? We draw a trend line. And we can see that although it's broken that trend line to the upside many times, what we really have is this standard area of major congestion. And since the high point here in September, before the rates were raised, remember, they raised rates here and they lowered rates here. And that gave us a market bounce, right? And so in this space, we can see that this is still an underperformer of pretty good size. Again, resistance right here, resistance right here. You can see what's happening. 2, 4, 5 days sitting in this motion, and it's fading. Here's the big difference. The last 1, 2, 3 times we were here, we're actually sitting right on top of these moving averages. And now we're sitting below, we're sitting above them, but they are starting to have slope. And so this one, again, rotation into value from momentum gives us this idea that old resistance is going to hold up as new support. And so the buy point's probably going to be at around 150 to 152. Because these markets are crazy, I say wait until it gets into 150 and then make sure that this is still upwardly sloping. These things can still have upward slope as they pull back. And as long as you bounce and hold off the moving average, then the moving averages, then the 150 becomes your variable stop zone. And then you can run it right back into 158, 160. If it moves out, superb. Again, the problem is, how are small companies going to keep market share if we have global slowdown and we have to fight as small companies, we have to fight mid caps and large caps? What is the likelihood of that storyboard? And so to me, feels a little like the jury's out. But again, because of the rotation in the value, it might be that these pullbacks into support zones give us good price action events until the rubber eventually hits the road.
All right. Looks like we need to go. All right. Thank you, Anne. Appreciate it. I know you're having an issue hearing us, but I don't think that's affecting anybody else. So I think what we'll do we're about 50 minutes in. I think you've done a fantastic job. And what I want to do is just spend a couple minutes talking about your plugin, if that's okay.
Yeah, absolutely.
Okay, because it's amazing. So anyway, I'm going to go ahead and change the presenter to me.
Okay, great.
And we'll just talk a little bit about what's included with everything. And I'm going to go ahead and I am getting a little bit of feedback. I'm going to go ahead and mute you as well while we do it.
Super.
Okay. Okay. Awesome. All right. All right. So everybody should see that. I do want to thank Anne. I think she did a great job of talking about the market, how everything's looking, giving us some good ideas in terms of the stocks, that kind of stuff. So thanks for that, Anne. Really, I think we should do more webinars where we're just looking and talking about stocks. In any case, I do want to talk a little bit about the add-on. As you've seen all day, she's been actually coming in and showing kind of charts using her add-on, and you've been seeing the support and resistance areas broken down. Those are actually automatically drawn with our expert advisor. All of the signals and the triggers and the exits, pretty much the whole chart was displayed by the mathematics we worked with Anne Marie to provide. And I just want to show you a little bit about that, about how everything works inside of MetaStock. And so she started with a chart of the S&P 500. I'm going to go ahead and start with a chart of the Dow Industrial Average. So you can see it right here. And this is exactly the way it looked when I pulled it up. We're looking at a weekly basis. And you'll notice that with her template applied, you're going to have the support zones, you're going to have the buy zones that she's kind of talking about, you're going to have the green and red highlights, and here we entered into a sell zone that would have been automatically applied. One of the features, if you're not familiar with MetaStock, is the ability for us to go in and have Anne Marie give you advice in terms of what's going in the chart in a automated manner. And so what I mean by that is if we go in here and if I right here we've got the commentary on the side, there's a little bit of a blue arrow right here on the chart, and this is just going to tell us about today. So right now it says the current data is 919, our current trend is bearish, last region support sits near, last resistance sits near 273. Currently we're in an open long position. There's a little bit of some definitions here that she gives you. I'm not going to necessarily read this out loud, but it just basically says once you're in a trade, you should look to kind of where you get into a resistance area, so right here. And it actually also gives you a stop. So the current stop for this trade that would be in would be 269.43, and that's updated every bar. So if you're looking at a daily chart, you'll get an update of that stop value every day. If you're looking at a weekly, you'll get an update on a weekly. Obviously, if you're looking at an hourly chart, that's going to update every day. Okay. I'm going to go ahead and zoom in just a little bit. And I think sometimes when we're kind of broadcasting, we kind of get a little too zoomed out, if you would. So you can't really see what's going on. But if we look at this kind of major correction that we had a little bit earlier, the exact date where we went into a sell zone on Dow was 7/24 of 2019. If I wanted to see exactly what Anne Marie's add-on would have told me, I can actually just click above this sell zone. My commentary, instead of looking at 919, is going to kind of change over, and it's going to give me what it would have said back then, if you would, if you hear what I'm saying. So at this time, we're currently at a bearish, gives us our both our support and our resistance areas, and it's going to tell us a new sell zone. It's going to define that on the chart. It's going to explain what that means to us, and it's also going to give us our stop value. So automatically, this is all generated for you, so you're going to exactly know what a sell zone is, what we should be watching for. And I love the commentary feature in MetaStock. I also think Anne Marie really kind of, when we were talking about what we needed for the stop, I think she did an excellent job in terms of putting this together and kind of making it available for you. The other thing I want to talk a little bit is the fact that since this is built into the MetaStock platform, it does have the ability for you to go in and test it. So you can go in and you can say, okay, well, let's take these buy and sell areas. Let's go ahead and test them. And what stocks do they work very, very best in? The other thing, and one of the things that I use on an almost daily basis, is the ability to scan. Okay, so from my perspective, like I'm an options trader. I like to trade stuff that's optionable. And I like to look only at the optionable stocks. So with scanning, what that allows me to do is say, well, okay, out of the 4,500 available opportunities, which one actually have an opportunity now? How can I filter out all of the noise in the market and go to what exactly works for the market right now? And we do that through scanning. And I'll just kind of show you a little bit about how that works. If I click right here on the scanner, so I click on this what we call the Explorer, it's a scanner. You'll notice that there's three scans that are available. So I can look for stocks that have a long entry today. I can look for stocks that have a short entry on the current bar. I say today usually because I'm usually scanning daily, but you can scan weekly and you can scan intraday if you want to. But if I want to kind of go through, and I'm not going to scan all 4,500 stocks, but if I want to go in and say, okay, well, show me some opportunities. Let me ignore all the garbage that exists out there. What I want to do is I want to focus on the stocks that are ready to have a buy signal. So I'm going to run a scan for the long entries. And what I'm going to do is, just to kind of keep it quick, is I'll just come down here to a list that we have in MetaStock called index constituents. And I'm going to go down and I'm going to go ahead and just do a really, really little list. And I might not even have any stocks come back, and that's okay if I don't. But what I'm going to do is I'm going to go through the Dow Jones Industrial. I'll have it go ahead and start that exploration right now. It's going to go ahead and open or look at all 30 stocks. It's going to tell me which ones have a long opportunity. And so right here you can see that it's running. It's gone through a couple of them. This goes fairly slow when I'm actually broadcasting video and audio through the internet, but you get the idea. Right now, it's rejected about 100% of the Dow 30 stocks. If I was running this without all the live share, it would be done. But the result of this, when it actually completes, is what it's going to give me is just a list of the stocks that I can look at today. And I love scanning. It's so helpful to be able to ignore all the noise and be able to just focus on stuff that has opportunities. So it is a fully integrated into the MetaStock platform. And if you're not familiar with MetaStock, I will talk a little bit about MetaStock. I myself have worked at MetaStock for 23 years as of March, which is when I started, just to kind of give you some background into that. I thought it would be like about a year. So for 23 years, I've worked here. For 25 years, literally in a row, it's been rated the #1 software because of its ability to go and test trading ideas, its ability to scan the market, its ability to go in and in real time, in a real-time environment, give you buy and sell signals. It's just because of the power of the tools. It's been rated #1 for 25 years in a row. I told that to a new sales guy we were training the other day, and he's like, I'm only 24 years old. So we've been winning awards for longer than some of our sales guys have been actually alive, which is pretty incredible right now. So in any case, we've developed this for this add-on for MetaStock to work with with Anne Marie's methodologies. We normally sell it as a $4.99. And that's a one-time cost. So a lot of times we'll give out a price like $4.99, and people will be like, well, how often do I have to pay that $4.99? It's only one time. So the bottom line is, if it helps you make one trade, it could potentially help pay for itself. Here at the webinar we're doing today, if you want to pick up this add-on, we're going to give you a discount of $3.99, and we're going to back it with our 30-day money-back guarantee, which means you can try it. If it doesn't help you, you can return it and you're out nothing. If you don't have a copy of MetaStock, we're going to throw in a free copy of MetaStock for you to evaluate while you're evaluating the target-rich trades. So think of it this way. You'd be getting Anne Marie's really powerful system. And in addition, you'd be able to try software that's literally been rated #1 25 years in a row. And if you don't like it, your risk-reward ratio is nothing, except for maybe some time. And that is valuable. Okay, so we'll throw in the MetaStock subscription if you need it. We'll give you the data that you need to power the software. We will have somebody that will contact you and actually help you install everything. Make sure you understand how to run the scans, how to install things. And we'll actually even also throw in our training course that's going to go through all the nooks and crannies for MetaStock. So I would recommend you take advantage of this. This has been a very popular add-on. And Anne Marie does such a great job of explaining things, but she also did a really good job with this add-on. So you can take advantage of that by going to metastock.com/AnneMarieA. You can give us a call if you have more questions. You want to get some more information, we can send that to you. Just give us a call, 800-882-3040. If you're international, or if you just don't like to talk to people on the phone, you can also talk to us via chat at metastock.com/saleschat. So with that being said, I want to say thank you, everybody, for coming. We had a really well-attended class today. I want to say thank you, Anne Marie, for coming and spending some time with us. I thought it was great. I thought you did a great job. I hope you guys in the audience liked it as well. If you do, make sure to like, comment, and subscribe. And with that being said, Anne Marie, we'll see you at the next one. For you in the audience, we'll see you at the next one as well. Thanks for coming tonight, guys.